Welcome everyone. Today we're going to analyze Palantir stock. We are going to look at the positives and negatives of their last earnings, and finally, we are going to determine what price you should pay for Palantir stock using my discounted cash flow model. And before doing that, I'm going to try to explain in a couple of sentences what Palantir is and how it generates money. Palantir is a company that is in the sector of data and artificial intelligence. According to their official page, they build software that empowers organizations to effectively integrate their data, decisions, and operations. This basically means that they make money by doing contracts with companies and governments in which they take their data and help them make better decisions and save them money. Now moving on to their earnings, which were yesterday, Palantir beat on revenue and EPS, and they reported the first profitable quarter on its history. And this is why the stock was up huge yesterday. Now regarding the main highlights, as I have mentioned before, they achieved net income profitably and GAAP earnings per share of 1 cent. Revenue growth of 18%, I have it in red because this is not good for Palantir. For other companies this would be great, but for Palantir it's expected to grow more. US government, I have it in red, but it's neither good nor bad. Adjusted operating margin of 22%, which I think is going to improve over time. 261 deals closed, up 20%. This is positive and investors want to see more deals over time. In terms of the full year, US business growth of 32% is very good. Commercial grew 67%, which is very impressive. Revenue growth of 24%, I have it in red because Alex Karp, the CEO, has said that they want to grow at a 30% rate. So 18% from Q4 2021 to Q4 this year, as we've seen, and for the full year, 24%. We also have to keep in mind that this is a very tough economic environment, meaning that companies are not willing to spend money on doing contracts with Palantir easily. Overall, I think their earnings were very good. As I have mentioned, the main highlight is that they achieved GAAP net income profitability of 1 cent, which is up 7 cents quarter to quarter and 9 cents year to year. So consistent GAAP progress, and we'll see if this keeps improving. Another very positive aspect of their earnings was that customer count grew 55% year over year, which is very important for Palantir because they can also grow their revenue if they increase the revenue spent by each customer. As you can see, the average trailing 12-month revenue per top 20 customer has increased 13%. So if they can continue this, growth of the company is going to be a lot. In my opinion, the main concern is the revenue growth. However, we have to keep in mind that this is a very tough economic environment, so we'll see in the future what revenue growth they can achieve. And just before we determine what price to pay, I want to mention two very good positives about Palantir. The first is that they have an amazing balance sheet, as they have 2.6 billion in cash and no debt. So even though it's a new company, it's a company that is not going to go bankrupt. The second is that their gross margin is 82%, which is very good. To put this into perspective, Microsoft has 10% less. It means that they are probably going to make a ton of money if they can keep growing and keep this margin. Finally, moving on to the discounted cash flow. We do not know the future, however, we can make assumptions about it to see what we should pay for a future stream of cash flow. I am going to make 7-year assumptions on Palantir stock to see what price I should pay for Palantir today. Starting with my revenue growth assumptions, the CEO, Alex Karp, has said that they are going to grow at a 30% rate, but we are seeing that this is going to be hard. So I've put 30% growth in my high assumptions, on the middle 25%, and on the low side 20%. In terms of profit margin, this is going to be hard because they do not have profit margin yet because they are spending their money to grow and they have just started to make money this quarter. However, I expect this to improve over the next few years. Alex Karp also said in the conference call yesterday that they are going to focus on profitability, meaning that they are going to improve their net income and cash flow. Microsoft is a software company and its profit margin between 25 and 30% with 68% gross margin. So maybe Palantir could be the same thing. Because I'm doing 7-year assumptions, I went for 12, 15 and 22. If I made the analysis for more years, I would have put higher margins because as the company stops spending the money on growing, their margins are going to improve. In terms of PE and price to free cash flow, the average of the stock market is around 15. You should pay a premium for Palantir because they are growing a lot and they have very good gross margins. This is why I went for 20, 21 and 22. Finally, the discount rate is the return you want to get on your investment each year. When you invest in an ETF, you can get 9%. So if you take the risk of investing in an individual stock, you should have a higher return. As your assumptions get higher, your rate of return should be higher. And your discount rate should be higher when it's a risky company. And Palantir is one because it's only been public for a couple of years. This is why I went with 12, 14 and 16. As you can see, according to the high assumptions, this stock is a buy, as you would get 16% on your return each year. If you believe the middle assumptions, the stock is a little bit expensive right now. And if you believe the low assumption, the stocks needs to fall a lot. In my opinion, Palantir is a company that I really like, and I think is very interesting, around $7 a share. Thanks for watching, and I'll see you on the next one.